Federal Reserve Chair Jerome Powell accused the Trump administration of threatening a criminal indictment as a consequence of not setting interest rates the way President Trump has wanted. Well, the grand jury subpoenas that Justice Department served on Friday are reportedly over Powell's testimony before the Senate Banking Committee last June. The Fed chair says that this is unprecedented action, and it's not about his testimony. Listen to this clip.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
You know, some say the Federal Reserve is outdated. Does it need to go, or does it still play a very much needed role in the U.S. economy? Joining me now to discuss this, Joel Griffith, Senior Fellow at Advancing American Freedom. Joel, welcome back to Washington Watch. Thanks so much for joining us.
Thanks for having me on. Really appreciate it.
Joe, I want to talk about the role of the Federal Reserve and whether or not it's still needed or if it's antiquated. But first, just give our viewers and listeners a little background on this back and forth between President Trump and Chairman Powell.
Well, sure. Over the past year, actually even prior to this last election, President Trump repeatedly made it clear that he believes the Federal Reserve has kept interest rates too high for too long. And since stepping into the Oval Office in his second term, the president has repeatedly cajoled the Fed chair, along with other board members, trying to get them to lower rates. So they've had an ongoing disagreement. The president has made it clear he wants interest rates far lower, and the Federal Reserve Board has not fully obliged those wishes. This spat has been ongoing. Of course, what was very unexpected was that the Department of Justice over the weekend would threaten the Federal Reserve with a bogus indictment that really makes the world think that we are turning a bit into a banana republic. This is a politicized indictment, and from what I can tell, it has no legal foundation.
I mean, by design, the Federal Reserve is independent. And you heard that clip from Chairman Powell. You know, whether or not they're going to make decisions that affect monetary policy based upon the facts of trying to regulate the economy, increase maximum employment while we have stable prices, or it becomes political. I mean, that's why you have that separation, is it not?
Oh, absolutely. And look, the only thing worse than a fiat currency that is not backed by something like gold or silver is a fiat currency in which the politicians can determine how much to print. We already have an inflation problem. We saw just a few years ago, after we saw Congress increase spending during COVID and following COVID, we saw what happens when the printing presses at the Fed become out of control. You end up with high inflation. And this wasn't just President Biden's fault or President Trump's fault. It was both presidents and both parties that pushed for the spending. And it was the Federal Reserve that allowed itself to become politicized. And the Fed ended up printing up a lot of money to buy up government debt. And that spurred inflation. That was bad enough. What we don't want is the Fed to lose all independence and to rely on President Trump or any other president or any other politician to begin dictating short-term interest rates. We know what happens. We can look at what's happening right now in Turkey with their central bank, and of course, even far worse examples in places like Venezuela and Zimbabwe, where the politicians have complete control over the money supply. You end up with very high inflation risks and uncertainty.
One of the concerns that the political class has over the high interest rates, for instance, here in the United States, I mean, that cost us $1 trillion every year to pay the debt, to pay the interest on our debt. And with a lower interest rate, they feel like the debt payments will be lower. I mean, that's certainly one thing. But is that slowing down economic growth that this administration is hoping to see through their policies?
Well, what's slowing down economic growth is overspending, even without the borrowing. The more the government spends, the more demand it places on our economic resource. We end up diverting resources from the private sector and from what we as citizens and businesses want to engage in, and we divert that to the government. Now, where inflation becomes a risk is when you have so much government borrowing that there's not enough excess capital in the market to lend to the government. And that's where governments end up resorting to having their central banks print the money, either to directly inject that into the economy or to take the newly printed cash and to buy up the government debt, which has the same effect. You end up with money increasing at a faster pace than economic growth. That's the danger that we face.
We just have about a minute and a half left. We're not going to, I mean, I'd love to see us go back to the gold standard. Not going to happen. So we only have two choices. You have an independent Federal Reserve that regulates the monetary system, the interest rates, or as you just described, you let the politicians control it. I mean, what other options are there?
Well, we could have Congress get involved and give the Fed more guidelines on how to operate. And one of the reasons why our housing prices are out of control is that you had the Fed attempting to artificially lower interest rates on mortgages, and we saw the Fed buy up trillions of dollars worth of mortgages over the past several years. That has directly impacted home prices. Unfortunately, I'm not confident Congress is going to restrict the Fed's ability, because we saw the administration just this past week encouraging more buying of more buying of mortgage bonds, and of course, trying to force interest rates down. Both of those actions would cause home prices to increase even further. So right now what we have a fiat system. Best case scenario is that we keep the control of that fiat money supply out of the hands of senators, congresspeople, and either president from any party.
That requires an independent Federal Reserve, correct?
That is correct. We want the Fed making these decisions without political pressure that would be encouraging them to make short-term political gains that would cost all of us dearly in the long run.
All right, Joel Griffith, thanks so much for joining us. Appreciate your insights.
Thank you, sir.